Welcome back to Fresh Economic Thinking with Cameron Murray. Today, a special guest all the way from Canada, John Pasalis, runs the Move Smartly podcast, great real estate insights. And I wanted to have John on today to compare what's happening in Australia's property market with Canada. John, welcome to the show.
Thanks for having me.
Maybe before we get to that comparison, what can you introduce yourself maybe to the listeners? What's your real estate background in a very brief summary?
So yeah, I've been in real estate for over 20 years. I own a small residential real estate brokerage in the Toronto area. So I have a team of agents that work for me. But in sort of the past, say, 10 plus years, I've also been, or 15, I've been pretty active kind of analyzing sort of the housing market, offering some, I think sometimes what are contrarian opinions of the housing market, and
Mhm.
some of them cited by, major institutions like Bank of Canada, different institutions. So, trying to use the data that we have access to kind of give insights that are not obvious and sometimes tell a different story from the narratives we hear from housing economists in Canada.
Wow. Well, that sounds like my type of housing analyst. So to give the listeners, the Aussie listeners, a different story. Um, I'm from Brisbane. Prices are still at record highs and growing as we speak in October 2025. The concern about affordable housing is still high as it has been the last couple of years. Australians almost don't believe that prices could ever fall. How does that sound compared to what's happening in Canada now?
Oh man,
How does it look from Canada in October 2025?
it's completely different. I mean, that's basically where we were right up to 2022, first quarter, when the rate hiking cycle started. Pure euphoria, pure like rapid growth in prices. And all of that has completely changed, I'd say over the past 3 years. We've done a complete turnaround, both in terms of price dynamics and I'd say even market sentiment has completely changed. We went from this period where housing was this get rich quick scheme. Everyone wanted in, didn't really matter what you paid. People were lining up to pay insane prices for pre-construction condominiums. And like when I say insane, people were paying 40 to 50% more for a unbuilt condo when compared to what a very similar newly built condo across the street just is selling for in the resale market, right? So there have been
Wow.
these massive premiums, taking on obviously a lot of risk. And that has all just fallen apart now as the market has progressed.
So when would you say the market peaked in Toronto, which is where what you're
So
from, right?
yeah, yeah, exactly. So I mean, and I say it's kind of pretty much the same in most of Canada, although Toronto, kind of had the biggest, I'd say, acceleration in prices. We peaked in the first quarter of 2022. Prices were up pretty much 30% year over year at that point. And obviously they're up even more since the start of COVID, but at the peak, we were probably up close to about 30% year over year price growth, which is obviously completely irrational for house prices to grow that rapidly. And then, the market really changed sort of instantly. And again, I think it was just the rate hiking cycle, the fear of what that might do to the market. We went from this euphoria and this obsession and homes getting 20 offers, and then all of a sudden homes were selling like literally in the span of a few weeks. Like the market had completely turned. And the way the market works in Toronto is pretty much anyone who, needs to move up, wants to get a bigger home, they typically buy their next home first. And then once they've, secured that, they don't have possession, but they've at least bought it, then they'll list their current home for sale. And people normally do that because homes sell very quickly in Toronto. Like, you list a home, it's gone in a week or two. They don't sit on the market for 3, 4 months. But the problem was a lot of people did that at the peak. And then when they went to go sell, they realized, oh man, I'm getting 50 grand less than what my neighbor got. And then like 2 weeks later, that person's get, the next person's getting 50%, 50 grand less than what the other neighbor got. So like literally in the span of 4 months, prices had declined several $100,000, like about 20% in the span of 4 months, largely because these were effectively distressed sellers. If you need to sell your current home to afford the next one, you have to
Mm.
sell no matter what. So that was the sharp decline. And then we've been flat for a while. And then more recently, we're starting to see prices grind down yet again. And we're down about 7-8% year over year right now.
Wow. So that what you've described sounds very similar to New Zealand, which had a absolutely crazy COVID era boom that suddenly had a big drop of 10% and then is ground down in the last 2 years, let's say, or year and a half, another 7% and is in that slow grind period. Um, Australian listeners, yes, property markets do have slow grind periods. So, do you know the data off the top of your head, John, about what those price declines have been in Toronto, like ballpark type?
Yeah, yeah. I mean, low rise, like how the average home price in Toronto is down about 27% from the peak. Uh,
So that's in
and
3 years, 27%, end of 2022.
yeah, so I think we were average prices at the peak. I mean, I'll just say low rise homes, for
Yeah.
example. So, like, not condos. A low rise home at the peak was around 1.7 million. Now we're about 1.3 ish, I think. Um, most of that decline happened, like I said, in those first 4 months. And now the decline is, what I think is a more traditional kind of bearish market for housing markets where, you know, sellers kind of stick to their price. They're overly optimistic. They just wait. Inventory builds up because buyers don't want to pay that. And then gradually people start to drop their price. And that's, again, one neighbor selling for a little bit less than the other one. And that's really the cycle we're in right now, where it's a slower decline. We're seeing more power of sales, way more distress. And the sentiment is negative, right? I think that's the key thing. It's almost like, sentiment works both ways. People don't realize this. I mean, we often think about it
Mm.
in the sort of bubble type environment where this euphoria fuels prices on the way up. But it works the exact same way on the way down. When the sentiment is overly pessimistic, people don't want to buy. They sit on the sidelines. They wait for, and this drags prices. And the only people buying are the ones who kind of need to, and they're not sensitive. But yeah, when too many people on the sidelines, it drags prices down.
Now, I know, so a few questions about that I'm sure the Aussies will say. They'll say, well, but Australian immigration is going to keep prices up.
Mhm.
Did that happen in Toronto? Did prices peak before immigration started falling? Because I know immigration had a post-COVID surge in Canada as well. Um, did prices peak before that peaked or after? Do you know?
Yeah. Yeah, they did. They did. So, or they peaked kind of leading up to it. I think the peak actually happened just after, but a lot of our population growth here was non-permanent residents.
Mm,
So there's, one component that's immigration, say about 400,000 people per year. But at the peak, we were letting in over 800,000 non-permanent residents. So like 1.2, 1.3 million people. It's like 3% population growth, which is like insane.
mm,
Historically, Canada's population growth was maybe 350, 400,000, like just around 1%. So this contributed to the growth. I mean, it contributed to the growth in rents. A lot of this was contributed to a lot of this non-permanent residents were international students who were just coming to Canada to study. So we have huge growth. So of course, every other investor wanted to buy a home close to one of these
mm.
colleges and convert them into basically illegal rooming houses, right, for all of these international students. And that was, again, one of the things that contributed to the rally in the housing market.
And so are rents falling now as well as prices? Have they come down 20% as well, or is it much?
No,
No.
not quite that much. Probably about down 11%. Rents didn't go up as much as house prices,
Mm,
of course, right?
mm,
So it's a bit different, but yeah, rents are down about 11%. Partly because so now we're at a period where like the growth in our population is pretty much flat or slightly negative. because the number of non-permanents exiting is higher than the number that are coming in. So we're shrinking our population. We also had a ton of completions over the past little while from the condominium market. So yeah, rents have been declining in Canada, in particular in Toronto, around 11%.
So you've got from the peak a 27% price decline, 11% rent decline. So you've got a yields have increased basically in
Mhm.
line with rising interest rates. And
I mean, yeah,
Canada's also seen that rising mortgage interest rate tightening
yeah,
cycle as well. So what
exactly.
could you borrow money for at the lowest point during COVID in Canada, and what can you borrow it for now if I wanted to buy a home in
I mean, it
Toronto?
started with a one,
Wow.
like in the one. I mean, exactly. Like I mean, obviously, prices are going to rally when you can borrow debt at like 1 point something, and
Wow.
long term debt. So, people are getting 10-year mortgages, I think close to that range. But, most of our mortgages are 5 years. So yeah, it was in the ones. Now we're, around 4%. So, huge difference for a lot of people who were getting these ultra low, payments and interest rates now are resetting, and realizing they can't afford it. But, that's impacting the average household. But the bigger issue is a ton of people just went up and loaded on investment properties and condos and houses, and they have properties that are resetting as well. And in an environment where rents are falling, and they're just struggling to make the numbers work. So that's part of the distress we're seeing in this market right now.
So you would say that part of this slow grind you're seeing in 2025 is also people rolling off the 2020 point something percent mortgages and realizing both investors and owner
Yeah,
occupiers and
yeah,
realizing, wow, I gotta pay 3.5 times, 3 times as much instead of 1.5, I'm paying 4.5.
exactly.
Maybe, and the rent's gone down, and so is the value of my house as well as the investment house. So
Yeah,
that is playing into it.
yeah,
So
for sure. Because yeah,
yeah, that's an amazing story. What I want to ask next is, did anyone see this coming? Did anyone in 2021 say, hey guys, this is a bubble. This is completely not structural. This is pure bubble dynamics that are going to reverse. We don't know when it's going to pop. Or was everyone saying in the bubble, oh, it's fundamentals, it's supply and demand, it's the zoning, it's the property taxes, it's the nasty politician I don't like. What tell me about the sort of policy debate media story and how that changed uh,
it's
between the
yeah, it is.
boom
It's
years
actually
and these years.
yeah.
Yeah.
I mean, it's an interesting question. I mean, I will say, coincidentally, I mean, I was probably one of the few people who happened to call it a bubble, which is, I mean,
Okay.
again, I mean, going back to my whole, I'm a bit of a contrarian. I mean, I'm a real estate, I have a brokerage. Most people in my business don't call the housing market a bubble. But it was pretty clearly that it was a bubble. I mean, obviously, I didn't. I mean, I think I wrote a post about that. I mean, the Financial Times wrote a piece on it. I think that was back in like 2021, sort of leading up to the insanity. But I would say, like most people in the real estate and in mortgage industry, were certainly alarmed. The narratives from that space was this market's crazy, it's irrational, it is a bubble. Population growth is nuts because you can't, in a country that builds 200,000 homes, having 1.23 million people per year doesn't make sense. You're just inflating demand in a market where supply, even if you remove all restrictions, you're not going to double housing completions. And obviously, cheap debt is driving both. It's pulling buyers forward. This anxiety. I'm, even people who are going to buy 2, 3 years in the future, like, no, I got to buy now because rates are low, and if I wait, they're going to be out of reach. So this is kind of the narrative that was on the ground from, I'd say, most people in my industry. Um, but there was a very different narrative from politicians, and I'd say from housing economists. And the narrative from these experts, um, was that it wasn't really a population growth problem. It wasn't really low interest rates. It was largely a zoning and supply constraints problem, right? And you know, if you look at any housing report before 2024 in Canada, whether it's from our national housing agency or leading housing economists, this was the narrative. Is like, here's my 300-point solution to triple housing completions in the short term. This is the vision that politicians had. And even our politicians were coming out saying, you know, the cities don't want you. This is why you can't afford a home. Don't blame the students. I mean, people in Canada weren't blaming students. We're blaming our government for supercharging the population. We're not blaming the
Hmm.
individuals. But these were the narratives, like real, like honestly, right up to, I think it was April 2024. It was, I mean, to me, I mean, listen, I'm not an economist. You know, I'm a practitioner. I work in the industry. But to me, when you see your population growth tripling and you see interest rates in the 1% range and prices surging 30 plus percent, I mean, to conclude that the cause of this is supply, I mean, just either seems disconnected from reality or deliberately intellectually dishonest because supply can't respond that quickly. I mean, anyone who knows anything about housing, you should know you cannot scale housing up that quickly. So these were the narratives, and I'll say until I think it was about April 2024 when like our federal government, which was pretty interesting, in their budget, in the housing section of their budget, they actually said, whoops, we maybe kind of made a bit of a mistake on this whole population growth thing. And we think now we need to, right size our population growth and line up our population with housing so we don't inflate prices and rents, right? And this
Wow.
pivot happened in the federal budget by the federal government. And then of course, once that happened, well, then everybody felt safe to go and say, okay, oh yeah, population growth actually may have been a factor. But that shifted after our government changed direction. And at that point is when they announced they're going to significantly scale back the number of non-permanent residents in Canada. So the narrative has changed, I'd say.
Yeah, that's really interesting how it takes one, official, reputable organization to come out and say something, and then everyone feels that they have permission now,
Mhm.
social license to actually say the thing that they thought would be low status for them beforehand.
Yeah.
Very interesting to see how that
And
unfolds as a
And
social
you're right.
pattern.
I think that's a huge part of it. I don't think that this was all just an intellectual debate. I think there was definitely this fear of this social stigma, of coming off as xenophobic. No one wants to be that person. In polite Canada, we don't want to come off as being anti-immigration. But again, most people that I listen to, we're not anti-immigration. Canada's a country of immigrants. It's just more about lining up immigration with our capacity to house people, which shouldn't be controversial.
Yeah, look, the migration debate is a tricky one. It's tricky to have in Australia as well. Uh, I would say I'm pro moderate immigration and pro not just doubling things unexpectedly and pro bringing people along.
Mhm.
Uh, Australia has, except for that one boom year you had, Australia's been kind of double Canada's immigration rate all through the 2010s, maybe triple.
Oh, you're
So
growing double our rate?
we were more than 2% all the way through the
Oh wow.
2010s every year.
Holy.
Yeah, yeah.
Wow.
But what's interesting is that you can, like, the markets do adjust over time. The second half of the 2010s, rents and prices were both falling in Australia. So, interest rates were coming down to stimulate the market. So we did adjust. It took a few years. So I think that's sort of it's a more subtle view that, yeah, the surprise immigration does have temporary effects, but it adjusts over time, and we sort of absorb all that into the national market. But you know, I think the media just wants to have, number of people, number of houses. This is a big number. This is a small number. It must be some price effect. So that's a sort of, a subtle debate.
Mhm.
How has the policy debate shifted in general, right? So you said
Yeah.
pre this report in 2004, no one could talk about migration. It was all this supply zoning story.
Mhm.
Um, how has the conversation shifted, or have people been strictly consistent and said, "Great, our upzoning was a success. Now we're reaping our rewards of 27% price declines and 10% rent declines." Like, how does anyone make sense of the change in that story? Can you maybe
So
help the Australian listener? Yeah.
yeah, so I mean, upzoning, even though they've done it in Toronto, legalizing multiplexes, they've done even more in Vancouver. I don't think it's had a really material impact. It's certainly not what has contributed to the declines. I mean, the declines were more just a bubble bursting, quite frankly. Um, in prices coming down dramatically. And again, you'd think these would be perceived and framed as policy wins. You know what I mean?
Mm,
Or in a country where housing's so affordable and rents are so unaffordable, you think this is great, but they're not. Interestingly enough, they're in many ways. I mean, even our own housing agency has flagged falling rents as like a big risk, and the risk is that supply will stop because I mean, might be shocking to some people, but builders like to make money. They're not supply maximizing entities. They're profit maximizing entities, quite obviously. But the economists, at least in Canada, would like us to believe that they're desperate to flood the market with supply and drive down home prices and rents, but the government's kind of in the way of doing that right now. And the latest issue now is not even zoning. The latest kind of the issue in Canadian the housing debate are the taxes on housing. So, cities charge development charges, which are basically taxes per unit they say to kind of pay for the infrastructure. On top of that, we have sales taxes in Canada.
hmm
So, on top of the sale price. So a lot of housing experts are basically saying, well, this is why we can't build home. The taxes are too high. And certainly the taxes, the city of Toronto supercharged development charges, right? And they did that during our bubble because people were paying ridiculous prices. And quite frankly, if they didn't do that, it wouldn't have lowered prices. Builders just would have paid more for land, right?
mm,
So the city's like, I want my piece of the pie. I'm going to jack up these taxes. So they did. The problem is, well, now it's not so much the taxes that are the barriers. I mean, prices have fallen 20+%. Builders can't build at a price that the consumer is willing to pay. So the story is now we have to slash the taxes basically to zero so the builders can build a product that it is a price point that the consumer can absorb at today's prices is one narrative. Now the building industry is also lobbying the government to get rid of. They put in place a foreign buyer ban like several years ago,
hmm
restricting the foreigners from buying homes. The building industry, of course, is trying to lobby to get rid of that because I mean, they just want to sell units to someone who's willing to pay the highest price. And if it's someone overseas and some fund, all the power to them is kind of their mindset. So this has kind of been the shift in the narrative in Canada.
That's really interesting. Yeah, I wrote about that at the end of last year. I'm not sure if you saw. I called it "We're in the tax breaks phase of the cycle."
Yes,
Because
exactly.
yeah, when prices are rising, what happens is higher density projects become the more profitable one during
Mm-hmm.
rising prices. You can justify higher density. And so the easy way to make money there is get the upzoning, right? Because that's
Mm-hmm.
one way policy change can give you free gains, right?
Yeah.
And then when prices are flat, that
Mm-hmm.
doesn't work anymore. You're already at the most dense project you want. If you went higher, it cost more, you'd make less money. And
Mm-hmm.
so you're like, well, how else can I get someone to help me with a policy change? Oh, well, they can
Yeah.
remove the taxes that I pay because I already own the land.
Yeah.
Um, and you're just going to sort of bail me out. So I guess we'll probably see more of that here. We've already seen it a little. Not every city's still booming. For example, Melbourne's had flat prices for quite a while in Australia.
Mhm.
Um, so how would you assess the stories? Like if you were to give a grade, A, B, C, D, E, F, for the policy community in assessing why prices went up and the causes and consequences. Let's just say, can you grade their like 2021, 2022 analysis from the perspective of 2025 in October? Did anyone get an A? You were the one of the only bubble callers out there.
Yeah, I mean, I think there were some people, not a lot. Again, like I think that I mean, shockingly, the narratives were all about supply. And of course, like obviously housing supply matters. Obviously, taxes on new housing and frictions are not good. Uh, but again, like if you're trying to draw some causal relationship between, 30+% price growth and all these other factors, I mean, obviously, it should be pretty obvious that the population growth, low interest rates, and all of those were bigger factors. And I mean, quite frankly, you can kind of see it globally. I mean, low rates during COVID supercharged housing around the world. I mean, okay, I'll give one agency a grade. I mean, our own housing agency in Canada, okay, the Canada Mortgage and Housing Corporation, PhD expert economists, again, who think it's all a supply problem. But during COVID, their forecast was that prices were actually going to tank. Okay. And this is what they kind of warned Canadians about. Prices are going to fall. I can't remember what they said, like 16% or something like that, cautioning people don't, be cautious about buying a home. All of this economic turmoil is going to lead to price declines. Now, listen, it's hard to predict the future. That's fine. But, obviously they don't weren't just wrong. They got it completely wrong. Like the opposite. Prices surged like 40%, right?
Yeah.
Um, so, I don't know what to say about the expert opinion sometimes. I don't know what to say
Look,
about
it's
it.
funny you brought that example up. I'm not sure if you know, in May 2020, so this is very early in COVID, a lot of people panicking. Things had been on hold for a couple of months, right? I think it was April, end of March was really the first week of global panic. And then,
Yeah.
in May, I did a podcast and it was called The Bull versus Bear on Australian housing. And I was the bull and I had 8 reasons why property was not going to fall because we had the Commonwealth Bank of Australia, the biggest bank,
Hmm.
predicting prices to fall. They had a 10%, 20%, 30% scenario and sort of had how likely
Oh,
these were, price
oh
falls.
wow.
And I said in that podcast, look, with these low interest rates, it's impossible for prices to fall 30%. It just doesn't make any sense. You'd be getting paid to just buy properties from the differential return. I
Hmm.
said properties much more likely to rise 20% in price in the next 18 months than fall 20%. And people hated it.
Oh man,
Literally, the YouTube comments, where did this
I
guy get
can
his
imagine.
economics degree? Back of a cornflakes packet. Where do they produce these idiots? Um,
I can imagine.
it was relentless and it was this real collective, I don't know, story, this collective panic or whatever it was at the time. And like people want to have a physical explanation for things somehow. Like it's very hard, I
Yeah.
think, for people to just see these relative returns, like low interest
Hmm.
rates. If property's yielding 4%, you're borrowing at 1.5, well, you're getting paid to borrow money and buy houses, right?
Exactly. Yes. Yeah.
And so yeah, very strange times indeed. But what's amazing and why I wanted to have you on is
Hmm.
we have a Zoom link here, but we also have a time portal because
Hmm.
Canada is in front of Australia. Now, so is New Zealand for that matter, and maybe we are not going to have that sharp correction, but we're going to have that grinding market at some point uh, in the near future in Australia. I don't know when, but at some point. Admittedly, we've had it in Melbourne, so it's not a sort of nationwide in sync thing. What are people expecting this to bounce now? So you've said that the latest problem is prices are falling and rents are down, and this is a new problem that we don't like. We didn't like
Yeah.
them going up. We don't like them going down.
Yeah.
What do the experts say now? Do you think they're wrong again in the opposite direction? Do you think there will be a bounce and now they're panicking for about things going down forever?
No, I mean, I listen, I think I tend to agree with this sentiment now. Like, even though I don't think high taxes or restrictions caused our housing prices, I think in a sluggish market where nobody could afford to buy a home and construction costs are so high, I think it's reasonable to lower the taxes on housing to stimulate the economy, because the reality is housing starts are plummeting, which is, of course, obviously another big risk. It's going to lead to economic challenges if the construction market and labor market softens further and we see job losses. So that's not great. The other big risk I didn't touch on, which I mean, you guys might find interesting, is what's happening now with all these condos that are completing, right?
Hmm.
So I mentioned, 4 years ago, everyone was lining up to pay 50% more than what existing units were selling for, thinking this is a get rich quick scheme. And like, many of them had no intention of even closing on them. They're just thinking in 3 years, I'm going to flip the unit to someone else, right? Make an easy 100, 200 grand. Well, now what's happening is these units are completing now, and the unit that they paid, $1.5 million for, the banks are saying, well, it's only worth $1 million or 1.1, right? That's like what it's worth in the markets today. Now, normally when that happens, you basically have like a capital call. Like the banks basically say, well, we're going to finance what it's worth. You got to come up with the extra 400,000 difference, and whatever deposit you put is kind of like the down payment on the actual value of the property. You have to come up with all of this price decline in excess cash, 300 grand or 400 grand, whatever it is. But today, the banks aren't doing that. What they're basically doing is saying, where we're just going to pretend that the property is worth what you paid for it. You don't have to come up with extra money because we want you to close on it. So we'll give you a $1.2 million mortgage on a condo that's only worth 1.1, because, we want you to take possession. Because here's what's happening: a lot of the banks who finance these projects, these construction projects, they want out. They want their construction financing out. So they're basically willing to turn a blind eye. And what they call them in Canada, they call them blanket appraisals, which is an appraisal that assumes the purchase price is the market value, even though the market value is way less than that. So the banks are turning a blind eye, doing blanket appraisals, trying to get people to close on their units. We have full recourse here. So if they don't close, the builder can go after their home. So there's that additional risk. So most people are going along with it. And that's kind of has been propping up a lot of these projects that otherwise probably would have failed, because, in the US, you can just mail in your keys, walk away, and call it a day. But we can't here. So that has been the latest issue. So, the challenge is going to be over the next, year or so. The gap between what people paid and what units are worth is widening. So we'll see how that
Wow.
plays out.
Well, I
Yeah.
mean, isn't this bad? Like, aren't they just keeping prices up by not forcing that sale?
Well,
Like,
yeah, yeah. So yes and no, right? Because what that person paid in the resale market kind of is irrelevant, right? Because yes, okay, let's just say they paid 1.5, they get the loan, they take possession. The second they want to sell in the future,
yeah.
they're gonna take on that loss, right? but the bank's just saying, you know what, I'd rather have 100 small problems and let those problems materialize over the next 2, 3 years when those people need to sell, rather than having, if you have too many people that can't close, what happens is the condominium corporation can't register. The project collapses, the whole building goes into receivership,
Oh,
right? And this is what the banks are trying to avoid when I say they're trying to avoid a big problem, because that's a big problem. It's like, not just does the project fail, it obviously kind of shifts sentiment even more. People are worried about other projects failing. So they're trying to avoid that, and by just basically kicking the can down the road.
wow. Wow. So there's something interesting for Australians to digest in there. A couple of last things before we wrap up, John. You mentioned housing starts, so that's new construction projects have completely plummeted. So is there a bit of a construction industry recession? Are construction costs coming down now? Is it more, if I wanted to build, let's say I did, even though I can't sell anything off the plan,
Mhm.
would I be getting sort of sharp pricing now? Because in Australia, it's just, it seems never ending. The construction cost increases, just people still want to build like crazy. And if you're a competent builder, you can just name your price. Has that
Yeah.
stopped? Was
Well,
it
it
like that in
has.
Canada?
It was like that, and this is again, I think one of the, I mean, I'm going to say a bit of the half-baked kind of ideas behind this whole abundance and tripling housing and all of this. Like when you supercharge the demand for construction, you're supercharging the cost of those inputs. Like you're supercharging the cost of the labor to build them, which is exactly what happened during our construction boom. All the construction costs skyrocketed because there's such a shortage of labor and there's so much demand for that. Well, now, yeah, of course, the market has eased. People are lowering their costs, people are lowering prices. So certainly construction costs have eased a little bit. And what's happening right now is the low rise market. So the new housing market is dead because, like I said, prices are down 27%. Builders can't really build. The condominium market is dead because that is even more disconnected from reality. So builders can't build at what people want to buy. So the only thing that, I mean, and this is Ontario, other markets in Canada are still building because they didn't have the same rapid boom and bust that we had. And a lot of other markets, prices actually are rising and are up over the past couple of years. But in Ontario and in a lot of Canada, what we're largely building and will be building over the next 2, 3 years are permanent rental housing. So purpose-built rentals. So this is, corporately owned properties. Our government is basically giving government-backed low-interest debt long-term to builders to build these. So it's a financial incentive. So that's really all we're going to be building pretty much over the next probably 3, 4 years.
Wow, it's very interesting to hear that that's similar in Australia. We've got a scheme with a bunch of tax breaks and discounts to attract build to rent corporate builders. We also have a thing in New South Wales recently announced, some kind of pre-sale guarantee where the government takes on some pre-sale risk to get you over the line and get your project out of the ground. Not sure how that's going to unfold, but it's interesting to see that essentially the same types of policy conversations or implementations are happening at similar time in
Yeah.
Australia and in Canada. So do you expect then this slow grind to unwind for a couple more years? Are we near the end of it? Are you going to get in early on the next bubble call? Or do you think there's a fair bit to play out just because the disconnect with reality of that period was so high?
Yeah, I think the signals are probably still weak, like slightly bearish over the next 6 to 12 months. I think there's still, mortgage arrears are on the uptick. They're trending up. They're probably going to be worse. So we'll see more power of sales. Economically, things are quite challenging. We're probably going to be losing jobs as a result of, manufacturing going to the US and Canada. So I think there's a lot of factors that could certainly put some downward pressure on the market. I don't think we're going to see a 30% decline from here, but it's probably going to be a sluggish market next year. Either flats to negative, and then, maybe the following year we see people enter the market, certainly for low rise homes like houses. I think the condo market's going to remain sluggish. Most of our especially the micro condos, pretty much all we've been building in Toronto is like micro 500 square foot condos, because most of our pre-construction condos were bought by investors, and that's what investors wanted. So this
Oh.
like oversupply of tiny rentals now, because they're all bought by investors. So that's going to remain, I'd say, a pretty sluggish market.
Yeah, very interesting. Well, gee, thanks for that is the most different property conversation I've had in 2025. Uh, just because the timing and the place in the cycle. I've got to say, it's from where I am in Brisbane, we have the Olympics coming in 7 years' time. So everyone now thinks the boom's never going to end.
Oh my.
Construction prices will never come down. Uh, everything's a one-way bet. I'm not so sure. If even if we don't have that sharp correction crash period that you mentioned, we might get those 3 years of slow grind, which would
Yeah.
be quite a substantial adjustment, right? As you accumulate 3 years of slightly negative rental growth in a, adjust for inflation, adjust for income growth, that's a big difference.
Yeah,
So,
absolutely.
is there any other messages on the theme of telling stories to the Aussies that you think, um, is there anything you wished you could have told someone 3 years ago in Canada about how it unfolded? What would you tell them? Because we've got this time portal thing going here.
Listen, I think the key thing is that, when the market looks completely disconnected from reality, and it's obviously hard to define what that is, because home prices have been increasing rapidly around the world. But at some point things just don't make sense. The relationship between prices and rents, what people are paying, especially when you're looking at speculative investments like pre-construction, like eventually things kind of go back to normal, right? And that's kind of where we are in Canada. And I don't, and again, I think part of this is it's hard to predict housing markets, because a lot of it has to do with policy responses, what governments do, and where interest rates are, and so many of that. But at some point, we had a euphoria in this booming market, this get rich quick scheme for 15 plus years, and then eventually the sentiment has completely changed now. No one wants to buy an investment property. Like, people are getting ruined financially because of their investment properties. And I think this is, I think in markets that are booming like yours is, I think it's important for people to remember that leverage is beautiful on the way up, but it's a destroyer on the way down, right? So people need to be cautious.
Yeah, yeah, that's right. Property, the leverage helps you, but yeah, it's quite interesting. There are some periods of time when, if you're the last one in during
Oh
the
yeah.
those boom years, that leverage is kind of come back to bite. Look, John, very much appreciate your time coming on and giving us that perspective. You can catch John the Move Smartly podcast, which I listen to regularly. Where else can people find your commentary?
On our blog and YouTube channel, also called Move Smartly, and I'm on Twitter as well at John Pasalis, Twitter/X, whatever you want to
Oh,
call
that's right. We're all still
it.
calling it Twitter years
Okay.
later.
Yeah,
Thanks so much, John. Appreciate your time.
for having me.